What did you do next?
So I had this company and I had always tried, my father worked at IBM for 25 years, and my father was like the world's best sales guy. He's like the guy that people just love because he's lovable. That definitely, I didn't get any of that. So I had tried to convince my father, say, hey, why don't you come work for me? You're a sales guy, but I can do all the technology stuff. Just do the easy stuff, the sales stuff. Okay, well, luckily for me, obviously he's a lot more mature than I was at the time, but IBM had run into trouble and they gave packages to a lot of people. So he took the package. So we took this little company that I had and we formed a company together. And then we were together for 3 years. And then I left because I adore my father. God blessed me with the best father, I think, in history. But my father's not like, I am very, very mathematical. I mean, when I was a teenager, I could predict the odds of whether some girl would like me or not. So my brain runs in numbers and patterns and things like that. My father has such emotional intelligence that I never really had. So that was a lucky experience for me. But I wanted to do something different. And if I saw things different from my father, it's like, okay, that's my father. I have to respect my father. So arguing with my father, so I would argue like you'd argue in the middle of a, trading session. It's just business, it's not personal. So I would do that. And it stressed me because it was my father and I have to respect my father. So I left. I said, hey, why don't you just buy my half the company? And then I left. And then I started a real estate company. So I had noticed on the south side of Chicago, there was an area that ran along the lake called North Kenwood. And I said, this is not going to last. So anyway, I ended up buying a bunch of land, built houses. And in 1992, I had actually written a paper on electronic knowledge interchange, how you could use algorithms to categorize all the knowledge in a system. So what I did was I tested this and I made a bet that this land was cheap. If I built houses that looked like they belonged in Hyde Park or Lincoln Park, that I could solve both an emotional and financial problem for people that were about my age. I was 34 at the time. And if I did that, I could convince people that if it was a transitional neighborhood, because the land was almost free, it was only $2 a foot at the time, that it would be successful and change the course of the neighborhood. And I was right, but I hated construction. So the name of the company was called Urban Fishing Development. And so it came from, obviously, this whole thing in the Bible, if you give a man a fish, teach him to fish, blah, blah, blah. So I did that. And then I said, hey, I'm going to go back into technology. And that was in 1998.
What was your technology company?
The name of the tech company was called Electronic Knowledge Interchange, which obviously gets shrunk down to EKI and then EKI Digital and EKI Consulting. And obviously being out of that business for so long, you just can't jump back into that business, right? Because it's all electronic and you need supercomputing power and things like that, which obviously I didn't have. But I said, what if I could apply trading, the principles of trading, to other areas of the economy? So I changed the name last year to the company, the Quant16. So I say we use the mindset, math, and methods of the quantitative hedge funds applied to industry and government to help them essentially find financial opportunities. So we created something called monetizable AI, which is built on large market models. So we can look at markets and figure out where the opportunities in the markets are and what things should cost you. So we're essentially taking that and applying it to industry and government operations.
What are your thoughts on the current project to streamline the government?
It is true that there is a lot of unnecessary costs in government, but you have a couple ways of looking at this. You can take a nuclear bomb and then figure out what's left. Or you can say, what do we actually need to do this work? what do we need to do this work? So, and part of the problem that you have in any large organization, so we created something called ecosystem economics. Economics, to me, are the incentives, constraints, alternatives, and interdependencies people use to make decisions. So for instance, imagine you talk to a CFO and you tell the CFO, hey, we've identified $1 billion of savings for you. The question is, what is the CFO going to do? And I say it totally depends on what's in it for him. If he believes, he goes, tells the CEO, hey, I found $1 billion for us. And the CEO says to him, you've been here 5 years. That means you lost us $5 billion. That is an automatic pocket veto. He's not going to take the chance, even if it is good for the organization, because it's bad for him. On the other hand, if he saves $10 and he thinks he's going to win the Nobel Prize, that's going to be on the fast track to execution. So I think most people don't. So we created something as part of this monetizable AI. It has two components: ecosystem design thinking, which tells you why things happen. So what we believe is that you can predict, optimize, or protect almost anything because markets move towards efficiency, systems move towards similarity, and people move towards incentives. So I believe you can predict most things, not precisely, but relatively precisely.
How would you apply AI to the markets?
There's different kinds of AI. What people are calling artificial intelligence, to be honest, that's marketing. It has nothing to do with intelligence. I'm sorry. It's pattern recognition based on content. Understanding the rules of content creation and patterns, the components associated with creating content. So it's content in and content out, which is why it's useless when it comes to trading. So what the quants do, what do quantitative hedge funds do? They hire scientists because scientists understand the connection between nature and markets. They hire quants to write the algorithms that find opportunities. The engineers then apply, the architects design the system, the engineers build the systems. What people are calling AI today are generative AI, and what now they're starting to call agentic AI, which is simply an if-then statement. What's different is that won't work in trading because it's based on content. Now, in the trading world, what people are calling AI agents, or I'm going to call it if-then statements, really. If you see this condition, do that. If the spread between the dollar and the yen does that, buy, sell, do this, do that. That is what algorithmic trading is, right? You're building models, people build models, out of that comes the algorithms, and then out of that comes instructions, which is if this happens, do that. Buy, sell, send a note, those are, so a lot of what came out, and it's not a surprise actually to me, that this deep sea AI came out of a quantitative hedge fund. And I really think that is what's next. It's not generative AI, which is mostly about employee productivity. So it is automation of manual work. It's employee productivity, but it's definitely not useful in trading for the most part.